Well, we made that new low for the week on Friday, but you know what? The buy the dippers came in. Wasn't as bad a loss. And what happens overnight? A week close and we rally back. We're in the green, folks, but doesn't feel super stable to me. It's a merger Monday. We got a couple mergers to talk about. One, I really don't understand it, but we'll get your opinions on that. We got some drug news. We got power news. Man, how much power do these big companies need? Benefiting a couple companies. Let's talk IPOs. 8:35, Eric Krull, Lifecycle Trade. He'll be joining us with some of the best preparation on Wall Street. Joel Elconin here, Brent Slava, and Dennis Dick on PreMarket Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, folks, we're just hanging out here up 17 handle, 68.91. Boy, we've been in this area maybe too long. The buck continued to show strength here, inching its way toward par, up 6 cents, 99.69. TLT pulling back after, who knows about December rate cuts. That's down 60 cents at 89.68. USO flat, trying to figure out what to do after that big rally. GLD, SLV going in the same direction. GLD up 369.12. SLV up 41 cents. We know Mish Schneider bought the dip on that last week. And what is ailing Bitcoin futures here? Nice up market, but Bitcoin futures are down $1,815 at $108,505. Let's bring in Triple D weekend, Halloween. Did you get sick from eating too much candy?
No, kind of got sick from watching the Jays lose, though. I feel bad for Canada's really behind the team. I'm a Tigers fan, so I don't feel that bad because Tigers, Jays always had a rivalry going. But you try to get behind it, you're like, oh, bandwagon on. They had friends at the game. They were so close. I mean, and bring Brentster in for the conversation with World Series. Brentster, how was the weekend?
Weekend was good.
It was just so like I know I've been there like with my Oilers the last 2 years, like when you get so close and you just don't get there. So I really know how the Blue Jays fans feel, like it's so disheartening. And the gap, it's just that gap between winning and losing. There's no bigger, we talk about gaps in trading all the time. There is no bigger gap than in a game 7 extra innings between winning and losing. You go from, the hopes and the chase and everything, and it's just to nothing instantly. And on the other side, it's to everything instantly. That gap, the two teams are right here in extra innings. And then that gap is just enormous. Unfortunately, there's no closing that gap, not this year.
Do you know, though, what is considered the most exciting moment in sports?
The Derby?
What?
Nope. Now, that's the greatest, fastest 2 minutes in sports. And you're going to, and I'm surprised you didn't know this, and I'm not going to quiz you.
Okay.
It is a game 7 overtime in a Stanley Cup.
Well, that's exciting.
Playoff hockey is
that, like, you saw what happened. You saw, like, actually, I didn't. I fell asleep because I don't know why I fell asleep. Well, was that Friday night or Saturday night?
You fell asleep during the World Series Game 7.
Was it Saturday night?
It was Saturday.
The Friday night game, they lost. And
they lost. Because
yeah.
You know why? And I blame television because Michigan had a 7:00 game on Saturday night. So I had to be around the house all day, driving Lisa and Dana crazy about going to the game. We go to the game. It's a 7:00 start. We're playing Purdue. Of course, we're going to kill Purdue. We're going to leave early, right? We played horrible. And then so I had to stay almost the whole game.
Okay, we better stop the sports talk here. Some people get upset when we talk sports too much, and it's depressing. So I talk sports when I get depressed. And I was having a fantastic morning. Like, my morning was awesome. All my overnight trades. I was long KVUE overnight because that's a huge one because it was due to report. I don't even know which day. I think it was due to report. We were long it for a reason. It must have been due to report. I didn't have it on there because we do the pre-earnings trade. So I'm like, huge. I get a takeover too. And then my whole P&L, the XBI trade did not work this weekend. At 7:05 a.m., my XBI trade implodes, and it is your big loser of the day, Brent Stern. We might as well start right there. QURE comes out with a regulatory update on AMT 130 for Huntington's disease. And it is not good. And the stock is down 65%. Not good for QURE, but not good for XBI shareholders either, because it's, I think, what do we say? 1.1%?
Yeah.
So.
Yeah, it's significant enough to do some damage to the XBI. And not only that, is Biohaven similar down on sympathy here, because similar drug down 27.5%. And Biohaven's in the XBI too. So we often get this like mergers on the XBI through the weekend. I do this XBI trade all the time. This is the double-edged sword, folks. Sometimes you get a bad drug news coming out and you get dinged on it. So it has happened before. It will happen again. It's been a while since I got dinged on the XBI trade, but I got dinged here this morning.
What's the symbol on the other one?
QURE and Biohaven, BHVN.
BHVN. Bravo Hotel Victor November. And I want to just read from the Unicure press release here real quick. Company says that it believes the FDA currently no longer agrees that data from phase 2 studies of its Huntington disease candidate may be adequate to provide the primary evidence of support for the biologics license application. Consequently, the timing of the BLA submission for AMT 130, that's the Huntington disease candidate, is now unclear. A lot of like, not good, but a lot of info in there if you do like to follow along with the FDA stuff, with the phase trials. This is, a pretty kind of like customary message that you will see.
When it's not good news.
When it's not good news. Yes, exactly.
When it's not good news. And I mean, we see these things implode and you're like, oh yeah, they'll just bounce back. They typically don't. So if you're buying dips on biotech names, they typically, maybe the pure one, but the main ones, they typically don't bounce back. When they go down 60, 70%, they never bounce back much. So when you go down 10%, that's, dips that get bought, down 15%. They go down 67%, everybody's just murdered. And usually the carnage, sometimes they just continue to leak. Sometimes they do come back, but more often than not, these are continued like death by 1,000 cuts. But that first cut here was like a slash in the guts of the stock right open here. QURE, awful morning for QURE shareholders, and not good for the XBI here either, which is obviously trading down, with being QURE being one of the components.
Doing technicals in this is really kind of meaningless, because if you're long, you're toast. If you're short, you're just figuring where to bring it in. But maybe I'll just try and turn this a little bit to a teaching moment, Dennis. And I know this is painful, but just for the people that are new, you do these trades over the weekend, and sometimes you parcel out at Friday night, sometimes Sunday night, just kind of winning. But a majority of times you hold out for the open, right? Hold out, Yep. You held out for the.
This is one that I unfortunately didn't parcel out on Friday night. Didn't parcel out. It was actually trading up at 7 o'clock. It was funny. I wake up in my bed around 6:40. I'm just looking. First thing I do is I pick up my cell phone and see what's going on. I check my portfolio. I was like, oh, I'm having an awesome morning. I'm like, this is great. I'm like, what's going on Kenview? I'm like, oh, this is huge. I'm getting out of Kenview. I'm like, this is fantastic. And then at 7:05, the QURE hits and XBI just implodes. And I was big in XBI, and I was like, oh. So anyways, I was like, 7 o'clock was good. I went, made my kids, working with my kids, breakfast, just enjoying myself. I come back to my desk at 7:20, and as the damage has already happened, and I didn't even realize it. So I was like literally off and gone, like from stock market for 20 minutes, and all that damage happened in 20 minutes. So this is how it goes. This is how trading goes, folks. Sometimes you win, sometimes you lose. I think about all those weekends I've been doing the XBI trade, and like, yeah, I got a takeover. Yeah, it's way up over the market. A lot of winning trades in the XBI. I think if I looked to like my year, XBI is probably one of my biggest winners. So today, it's that double-edged sword. It's digging you back. So unfortunately, nothing works 100% of the time.
I did one final note. Dennis, you are so responsible for your trades and things that are happening, but you know whose fault this is?
Whose?
Daylight savings.
It is. It screwed me right up.
Yes.
I should be getting up earlier, actually. So
Yes,
it should actually be
I know.
helping me, but
I
don't
should
know
have gotten
why.
up earlier today too. But it's like
Yeah.
I went to bed later. So
Yeah,
it's
that's
like,
what it is. We
and
went
then
to
you get
bed
up
later.
and
That's
it's
what
so
it is,
dark.
Joel. I wasn't
What?
tired last night.
What?
100%.
No, you weren't tired.
Yeah.
And so it's daylight savings, and you get up and it's pitch dark. I don't.
Yeah.
So I think that you should get reimbursed for.
Blame daylight
I
savings
agree.
time. We need to move to Phoenix, Arizona, where they don't believe in it. Isn't it Phoenix that doesn't do daylight savings time?
All
There's
of
not a lot of
Arizona.
places that don't do it.
All of Arizona, I'm pretty sure.
Yeah,
Kayfabe?
Arizona's is screwed. You know what? And the Arizona XBI traders all were good to go because they were up early and they traded out of it. So if you had XBI long in Arizona, you would have been fine.
So is this a moment we can jot something down, and maybe we just don't trade as heavy after daylight savings time after we go back into standard time?
Yeah.
Is that the
I think
educational
so.
moment for the day, for the week?
Yeah, I
for the
think
month?
so. If you're
Okay.
gonna trade the XBI, do it from Arizona. There you go. That's the moral of the story. And that's the show, folks. Thanks for coming out. Now, okay. Earnings week. We don't have the big names this week, like the big Meg 7s behind us here, but we have some big names, and the biggest one is going to be AMD. It's going to be AMD. It is Tuesday. It is going to be the name that reports here. Obviously, one of the biggest positions in my long-term portfolio. I've said I think this thing, is going to have. I think it's in a good position to take a big chunk out of NVIDIA's market share over the course of the next few years. So I'm positioning for that. Obviously, the market cap is a fraction of NVIDIA's at $5 trillion. AMD, the last time I looked, I believe was $400 billion. When we were investing, was $200 billion. It's over doubled since then. So it's come up quite a bit. Maybe it's even more than that now, because I think when we were investing, it was $200 billion. I haven't looked for a while. It's probably $500 billion now if you want to look in the background. But give us your thoughts here, Joel, on AMD into the print. I mean, Tuesday, and this is what the show is going to be a little bit about here. We've got some other news, obviously, to go into.
Yeah, we got the
can
merger.
get into the KVUE.
We got the merger, but we'll talk about that after.
Yeah, we'll get to the IREN. We're going to get to that, but I just want to talk AMD here first of all, because it is up another 1.23%. So the pre-earnings trade working so far in AMD as well. Thoughts here just going in, because this is your big. This and Palantir. We're going to do Palantir too, folks. Don't worry, they can come up tonight. But these are your two big names, like the retail really follows.
Okay, so this is not coming from me. Okay, this is something I read today from a person I respect very much, and I think this is a crowded trade.
AMD.
Yep.
Oh, they're all crowded. Every single. so here's obvious guy says. Every single tech trade is massively crowded, like so crowded. If you think your tech trade's not crowded, you're not looking at it. We are all crowded. NVIDIA long, it's crowded, folks. It's $5 trillion. It's just a little bit crowded, just a wee bit. They're crowded. Yes, crowded trades can get hammered for sure. But why this one specifically more crowded than other ones?
Oh, it's just had such a run, and I know it hasn't followed the Oracle scenario yet, but I mean, I've seen this stock go down on good earnings. I mean, I just think people are just, I don't know. I kind of feel like people are just willing to take some profits here. We're getting into November. What day do they report? Is it Veterans Day or later in the week?
Tomorrow.
It's tomorrow.
Tomorrow night.
I mean, if they miss, like whatever the expected move is, I would be here. I'll put it the best way. I would be more of a seller at the top of the expected move than I would be a buyer at the bottom of the expected move.
What is the expected move? Can we just go quickly grab that, or somebody's got it in the chat? We can already do this ahead of time here.
Well, no one likes the way I do it, so
I don't like. I don't do it.
Yeah, no one likes the way I do it.
So obviously, you got to look at where the options close. So you go in, you get the pricing, the closing prices. We can just walk this through you. Then you go to the closest strike, and you add up the calls and the puts for the weekly expiration, which is we're going to right now 255s, $12,
$25,
$10, 12 and 11, $23.
Close.
It's big. They expect to move $23.
How do we use that information?
Well, when you go to the close, or when you go into tomorrow, you take 23 up, 23 down from where it closes, will give you the expected move. And when the price gets into that expected move and it comes out of it, like we have seen cases like Meta last week. obviously traded way below its expected move. Microsoft bounced exactly at its expected move. So did Apple. Apple respected it very well. Apple went right down to the lower band of its expected move, then went up just slightly over the expected move, and then landed right in the middle. So, I mean, usually what I do is if I'm trading those things, or if you have options, when it gets there, that's a profit-taking area. So, because usually, it's a natural market-making mechanics too. If you're long calls, I've said this before, for instance, if you got the AMD, we can just use it as the example. You got the 270 calls or the and you're thinking, or the 280 calls, and you're thinking, yeah, baby. It gets up there to 280, there's natural sellers because you short the stock against your calls. Goes down the other way, there's natural buyers because you buy the stock against your puts. It's the way market makers do it. That's the way traders do it, not people who don't have any money in their account and they're just trading them like lottery tickets. But that's how to, the options were designed to have the right to sell or the right to buy. So people use those rights. So that's what they're designed for. So the natural market making mechanics try to keep it in line. Now, if there's a big blowout earnings, then market makers are scrambling a little bit. They're scrambling a little bit. And that's where you can really see some violent moves sometimes, some unwind. So it's not always respected. But CC Legator, who we have on here on Wednesday, 1:30, that's obviously on the show for you guys here, does this very well. And he respects, and he's given us some great stats, and they stay within the expected move the majority of the time.
Just for a programming note, Wednesday, he's on every Wednesday, and we put that in the STN room, and that's also on YouTube. On Friday,
you guys can have that without subscribing.
Every Friday at 1:30, he comes into the STN room, and it's just a whole question and answer session. He goes over everyone's positions and helps them. And then on Fridays, also on an expiration Friday, he doesn't do the 1:30. He joins us on pre-market prep because he loves expirations as much as I do. Final example on this expected move, CAT the other day. I think the CAT expected move, and I believe I got this one totally wrong, was like 25 or something like that, or 30, right? How much is CAT going to move? And it was above his expected move, and it opened up, and it just kept grinding higher. And what that was is market makers, specifically options market makers, that were short the calls or short the short puts would have been okay, but they're just scrambling. They're absolutely scrambling. They just got to bring stock into, and CC explains it, to get that, you think your beta's here, and then it's here, and then you're just like scrambling. So that's what happens. So the expected move.
Okay, one more preview, and then we're going to get into some other news here too. But we got to preview Palantir. It is tonight, PLTR. A lot of people obviously talking about this stock here over the weekend. HIMS is tonight too. We could do that one too if you guys want to. Let us know. We could preview HIMS as well. But I'm just quickly going to go get you the expected move for Palantir. It is up. Pre-earnings trade works again. Another one we were talking about. HIMS worked again well. So the pre-earnings trade is working really well here this morning. But if we're just looking into tonight now, because the pre-earnings trade, I run it over the weekend, but then I exit it now. Stock closed 200. It's trading up at 205. We'll just look at the 200s because that's where it closed. Actually, the expected move is really close to the same thing here. 1080 on the calls, 1020 on the puts. So what is it? $21. $21 expected move for Palantir. I think it's going to stay inside it. I don't think it's going to be. I think it's one of those stocks that's just like, if you get down near that 180, people are going to buy the dip on it because they love the company. And if it really goes up, there's just a lot of people sitting on a lot of profits here too. So I think this is one that actually stays within the expected move. That's my official prediction.
And I think another thing that bodes well for what you're saying, Dennis, it's just such a thick stock.
Oh yeah,
you're right. Trades like water. The options are probably very liquid too. So yep. Okay. So Dennis is the seller of the straddle in Palantir.
Yeah. And last time I did that, I remember it was Apple, and I don't sell straddles anymore. I've been murdered selling straddles before. Like, if you're gonna do it, maybe you got to like buy some upside calls or downside.
Clip the wings.
Hedge yourself a little bit, right? There. Yeah. Yeah.
Yeah.
It's fun. So Palantir, do you have a feel? Like, do you think like the move? Obviously, the expectations are really high. Stock's at all-time highs. So I mean, but this is a stock that is so loved by retail that even if they don't meet the expectations, don't you just think they come and buy the dip on this anyways? This is like the most loved stock. This might be, like, we keep talking about, like, you had like retail darlings through the years? And that would be an actual question. What is the most retail darling stock ever? It's probably like GME because of what happened, with the whole thing. But that was kind of memester too. So it wasn't every retail trader trading GME. I feel like Palantir is like the retail stock of the last 2 years, where people just love this stock. I feel like it's that stock. Is there there's obviously lots of other ones.
What
too,
about Tesla?
I think
yeah,
Tesla's
oh
up
yeah,
there.
Tesla for
I think
sure.
Palantir
That would
top
give it a
5.
fight. That would give it a
Yep.
fight.
Yep. I mean, Nvidia up there. But you're right. It is a really good question, Dennis.
Yeah, like what's the most retail loved stock at this moment in time? What is the most? Like let's forget about history. Just at this moment in time, Palantir got to be right up there still. They love this stock.
Chat?
Any dip, these dips never last long in Palantir.
SMCI, someone's throwing in there, Steve. You know what? SMCI heard some people. They did. Do we still have the results of that accounting thing? I mean, are we still waiting on that?
I got hurt on the second part of it. It was like awesome. The first part of it, I had that huge run up when I had it in my acronym, and the stock went from like 300 to 1100, and that was huge. And I sold most of it like 900. Remember, I was in that a long time. I took the meat off of that one. I don't usually do that, but then I re-entered it at 700. And then it ended up going, this was the before the split or whatever, the 10-for-1 split. So then I ended up getting out at like 6. So I lost like 130 points on the backside of it. So I made like 500 or 600 was good, but I did give some back. Double dip. Sometimes you shouldn't double dip. Listen to your parents. Go in there. No double dipping. Get away from the dip. No double dipping. I think that's sometimes not a bad call.
What about, but did your kids ever eat butter with their fingers?
Your kids were. Do they do that? Your kids
savage.
Give them hell for that. Dana and Emily were eating butter with their fingers.
Yes.
No, you should give them hell for that one. Dana and Emily, you're in trouble for that.
And then we would turn the other one. The other one would grab it, and boy, I hope they're not listening. They're gonna be really
I just grounded them.
We're getting a couple hoods in here, Dennis. Shintan.
Oh yeah, you're right. It's a good call, Hood. Hood is up there. Give me your top 10, top 3. Top 3, put them in the chat right now. Hood, Palantir, Tesla. Those are 3 biggies. There's more, though.
That's it.
There's more.
Hood.
NVIDIA, I see more as like an everybody stock. I don't see that as a retail stock. I see that as an institutional. I see that as like everybody in the whole damn world owns it. So
I think
who doesn't own NVIDIA?
I think you did the list right there, Dennis. Palantir, Hood, Tesla. Solid list.
But I think for the moment in time, like for the one, like AMC, I mean, for the heights of heights, it was AMC. It had to be the 8.
GME was ahead of AMC, I think.
Yeah, you think so?
I think so, Joel.
Yeah.
I think GME.
SoFi is a good one.
Oh, they like SoFi. I do the SoFi weekend
Dennis
trades.
This
is Dennis's portfolio.
I'm liking these things on the weekend.
Dennis, how do you make money buying these stocks on the weekend?
Listen to my weekend trades here. Can you go in there and read them off or show them?
Yeah,
you want to show them? Bretster's going to show you my weekend
okay.
trades here from the SDN. We got to look into it. So I do overnight trades all the time, but on the weekend I get all retail-y. I go in all these retail names. You'll see the one I lost on the XBI is listed in there, and that was an ugly one. But there was a lot of winners. I win like 90% of them. The XBI dinged me pretty hard though. But yeah, on this weekend I was winning on about.
Let's see, are you going to get a Bretster?
He's going to get it up there. He's going to show it.
Go.
Yeah, this is what we do. We come together as a team in there. We're looking at good stocks for the week. He's going to get it up there. He's going to show it. Yeah, this is what we do. Oh, come together as a team in there. You just got to mute. Good stocks for the week. He's going to get it up there. He's going to.
Hold on.
And if you want, Dennis to try a stock, all you have to do is
you can show it. You just got to mute it.
Yeah,
and then it won't. And then it won't.
In the bottom right corner. And if you want Dennis to try something, just say, yeah. Hey, Dennis, how about XYZ? Yeah, I'll try it.
The chat is good ideas. Our chat is solid too. We have good ideas in there. But anyways, okay.
Here's the tickers. Here's the tickers. I just put them in the chat.
You just typed them all out. Yeah, so those were my weekend trade longs. Gaddy. Ooh, that one's not good. But I
man, Gaddy,
XBI, this is a bad. Are these the ones? And Fubo? Is it Fubo? Fubo's good.
Get Gaddy off there. Holy
yeah. Joel hates Gaddy.
I'm buying
Joel hates
more.
Gaddy.
I'm not.
Remember, I made like 5 cents on Getty, and I would say, Joel, you got to sell when you got the money.
Oh my God!
Hims is
Get
good.
that off the
Hims
screen.
was one
I don't
because
want to
Hims
hear this.
reports
Move
tonight.
on. Move on.
Okay. Anyways, these are how many trades I took over the weekend. There was a lot.
There's like 40.
40. I made on like 33 of them, and there's like 7. But the XBI is a big loser, so I'm not going to say I'm raking it in today. Not raking it in. I was raking it in until XBI 705 happened. Okay. Moving on. Yeah, Hims is tonight too. That's another retail darling as well. If you want to keep giving us your retail darling names, Hims would be up there too, but not nearly at the category of a Palantir or a Tesla. So back to news. We did have the merger. I was on KVUE, if you would have thought. That's why I was trying to go to that segue. So I was actually long KVUE into the weekend there. And again, I think it reports Thursday. So I was doing it for the pre-earnings run here. I was like, you know what? Stocks speed up. I don't mind buying stocks at 52-week lows when their earnings are coming up because I'm like, there's usually short people. So here's a strategy. Look, I give you guys strategies at 8:25 in the morning. Write this down. Stocks that are really beat up in eternal downtrends, your momentum traders, they won't touch those. They're like, oh, no, I don't buy. I do. 3 days before, 4 days before the earnings, I start to buy them. Why? Because if you're short it, you start to cover because you don't want to take it short through earnings. So people who have been making money on the short side of it is like, they're not going to take it through earnings. So you start to see upward buy. And then you have people like speculating, well, it's really beat up. Maybe it's going to actually not be that bad. They think lower expectations. So often on really beat up, when they're really beat up like KVUE, you often see the stock start to drift up before earnings. Now we got lucky. We got the damn thing bought out over the weekend. So it's been a while since I was long a takeover stock just on a weekend trade. But, here it is. So KMB comes in, buys KVUE, and a $48.7 billion deal. Do we have the actual takeover price here, Mr. Brentster?
Yeah, it is. One sec. It is $21.01 per share in mostly stock. There's about a $3 per share cash component.
Yeah. So because it's mostly stock, this would have been a really killer deal. And you can see the algos, they just buy right up because they're stupid. And they buy it almost all the way up to $19. That would have been good to sell up there, actually. But again, this was announced at 5:24 this morning. No, sorry, 6:30 this morning. Yeah. And I was unfortunately sleeping because of daylight savings time. So it cost me more money on this too because I would have got a better price. But when you have a stock deal, they typically hit the acquirer pretty hard. They are absolutely hammering the acquirer. KMB is having 14%. Maybe one of its worst days ever. You don't see a staple usually go down 13.9%. But in this case, you do because they don't like that they're buying KVUE and they don't like that they're paying that much for it. So KMB just having an awful day. I mean, just giving this perspective, this stock just, it took, and it's been in a little bit of a gutter, but in 2 months, it's lost like $15 in the last 2 months. It lost $15 in 15 seconds on this merger. So it's interesting. Maybe this is actually one that you would like to buy the dip on, Joel, because when the hell has KMB lost 17 points in 17 seconds? Has that ever happened? This is a staple. This thing doesn't move like a tech stock. This is a huge down move for Kimberly Clark. One of the biggest down moves I've ever seen in Kimberly.
Yeah, you're off the pre-market low at 96, 98.35. Haven't bid sub 100 since 2019. Right, everyone, the run up here. Everyone in COVID needed toilet paper, so they were going to Costco like me and just buying a lot of toilet paper. But to me, if someone came in the boardroom and said, we're going to buy KVU, I would say, do you know what the government's doing? You know what Trump's doing? This whole Tylenol thing? I think there's a little bit of overhang over the stock. I mean, it's a contrarian call, but I don't know. I mean, they're probably looking at this. It's not, this is not going to stick. It's at a low valuation, yada, yada, yada. We need growth. So I don't know what else KVU sells, but I think the reaction that you're seeing in the stock in KMB right now is similar to me. Like, what are you doing? So, and I don't think anybody else is going to be coming after him. So that
now making a new 8-year low.
Yeah.
Kimberly Clark. And this was a stock that was right near its 52-week high and all-time high earlier this year, up at 150. So we just went from 150 to 100. This is a consumer staple, folks. This is something, like Kimberly Clark. Like, think about everything they sell. It's like Procter & Gamble. They sell everything that is sticky, stuff that people will buy no matter what. People will probably continue to buy Tylenol, but they don't like that this is fitting in here. But I mean, if you look at Kimberly Clark products, just for fun, you know, like I'm trying to say, like if you're looking at buying a dip on something, this is a staple. This is like, I'm trying to consider myself. I'm considering for myself right now. I don't own any Kimberly Clark. They got Huggies, Kleenex, Kotex. They got Scott paper towels. I mean, I'm just looking, you know, from Google AI here, just going. But, you know, this is like everything that you buy regularly, no matter what the price, stuff you use all the time, daily, weekly, monthly, you know, there's all stuff that you use. Consumer staples. What a down move for Kimberly Clark. I'm just in jaw dropped, you know, from how much this down move is for Kimberly Clark. So imagine if Procter & Gamble fell 14% in a day, Joel. That's what this is equivalent to. You'd be like, what the hell? Procter & Gamble doesn't do that. I don't know. $100, man. I bet you $100 finds buyers on Kimberly Clark. KMB.
Yep, definitely an overshoot.
But they do not like this Tylenol deal.
Yeah, and
the shareholders need some Tylenol after this deal.
Yeah, and I don't think anyone's going to come in and you know, I mean, they're selling. I mean, look at the K-View. I mean, going public here, they're selling this thing like they must be worried too. I mean, it's back up here at 21, but
well, no, but because it's falling, they're not worried. It's because it's following its stock deal. So Kimberly Clark loses 13%. What's the ratio, Brent? Can you go grab the ratio? Yeah, so it's going to follow that. Risk arbs are following the ratio.
Yeah,
It is the stock component is 0.14625 KMB shares for each KVU E share.
Okay, so when you lose, so 0.15, just round up 0.1462. Yeah. We're round up 0.15 so we can do the error math here. Okay. KMB loses $17. That's $2.80 off the price, 21. So there you go. That's $3, basically a $3 fall because of how far KMB fell today. Basically falling $3, $2.50. That's your risk arbitrage to it. So it's now going to be linked. So KVUE is now going to be linked to KMB. Shareholders aren't going to like this one. They're not going to like this one. So we'll see what happens if it goes through, but I don't think shareholders are going to like it. Okay, we got 3 minutes. Actually, let's go. We've got Eric Krull in the background here. And I don't like to keep Eric waiting because there's so much good content. He always puts his presentations together so well for us. So without further ado, let's go talk a little Lifecycle trade with Eric Krull.
Eric Krull, the author of the Lifecycle trade. Eric joined us early in the background there. I hope our content was okay leading up to your appearance. Eric, how you doing?
I'm doing great. It's good to see you guys. And I liked your comments about the Kimberly Clark. I mean, boy, if you buy it here, you know where your stop loss is. It's pretty simple on that one.
I just can't believe like that they've hit it this hard. Like this is one of the biggest consumer products companies in the world here, down 14% because they don't like the merger. I mean, that's you don't see that every day.
Yeah, that was a big shock.
Yeah.
Where would your stop be, Eric?
The low of what it did in the over the weekend.
Okay. I mean, over the pre-market, just under. How low did it get?
98.58.
Yeah, that would be the stop, right?
Yeah.
Yeah.
Or buy some there, buy more there, you know.
Yeah, you just double down. Never frown average down. Like everybody else does.
Quick trading story. When I worked on the oldie desk and someone would be on the position and they get a bunch at 100, you know, and then it would go down to like 96 and well, I'd be like, hey, you know, just drop $4. You got X amount of thousand on what I like it here. I really like it here. I go, you liked it at 100 and now you're liking it at 96. So
well, if you liked it at 100, you gotta like it at 96.
You gotta love it at 96. Yeah. But Eric, give us, before we go to your slides here, give us the macro backdrop here on the IPO market.
Well, we're having a pretty good year for the IPO market. If the way the numbers of IPOs are going, this will be the third highest number of IPOs in the last 10 years. They've been a little bit smaller. The proceeds they're getting are going to be probably the fifth highest of the last 10 years. But finally, after a pretty slow IPO market for the last 3-4 years. It's picking up, and we're seeing some big names come out this year. Some of the ones that I've talked about for a while, which we'll get into, have finally come out. But yeah, no, the market's been a little bit hotter, and I think it'll continue to be as long as we start getting companies that do well after they come out public. And if the economy keeps going well, and we have a big surge in money invested in AI, and I think we're going to start seeing some AI related IPOs, and that will be exciting.
Will we ever get back to 142.4 billion?
142.2, but no, I don't. Never. That's not going to happen. That was a blow off top, and that's the year that doesn't even include SPACs. I just don't see that happening.
Okay. All right. Well, let's move on to your presentation here. Let's start with the good guys, the best performing IPOs since January.
Yeah, it's a pretty good list. We don't normally have that many that have gone up over 100%. From their day one close in that short of a time. There's some ones on there that I like. There's some in there that I watch, but I'm not excited about yet. Like, for example, Nano Nuclear. I watched that one. That one scares me. They have no sales yet. This is the small modular nuclear reactor companies. I think that's a great opportunity coming forward. The stocks have gone up a lot without any sales yet. One of these companies are going to ink a deal, and that will spur some more growth. And I think it'll be a great opportunity for a lot of people. We need energy, and these are no carbon pollution. And if they can do what they say they're going to do, this could be a great opportunity for these small modular reactor stocks.
You said they don't make any money, and do you ever try and play any of these? You reversing your strategies and playing them from the short side?
They are so volatile. I have tried these on the long side, a couple of them, and not made any money. And so I actually have a little watch list category because I do not buy because they move so speculatively. Trump talks about doing some deal with the UK about a month ago. These things all moved up a lot, and then they just all faded. So they move on news. They don't move on earnings. I really want to invest in stocks that have good sales growth, good earnings growth, and these don't have that yet.
How much, when they come out of the quiet periods, how much credence do you give to Wall Street analysts on some of these stocks?
I don't give much credence to Wall Street analysts, period. They don't seem to have a track record that impresses me. I watch price and volume, and I watch how the stock actually does. That's what I watch.
Okay, and the trading volume, your criteria, this is greater than 20 million shares a day. Just for
$20 million of volume a day. I take the share price times the average daily volume. Yes, I want to make sure I get a stock that has institutional quality, that doesn't have, I don't want a stock that I can move at all, but with my trading, I want a stock that attracts institutions because they're the ones that cause the long-term growth in share price.
Okay, what's on your radar?
I want to put some new ones up here. These are some recent IPOs. And if you look at these are all weekly charts. I like the first three in terms of I want to see a stock that when it comes public that they either undercut their day one low and start to move up, or they move up quickly and then go to a sideways consolidation. Miami International Holdings, or MIAX, that's an exchange down in Florida, in Miami. They are number 3 in terms of handling equity volume in the U.S. They handle almost 10% of all stock trades. They handle almost 10% of all options trades. They say they have a low latency, so they're high speed. I'm watching it because we've had some pretty good moves in market stocks over the years, like the CBOE and NASDAQ. This one caught my eye, and I'm watching it. It looks like it's going through a consolidation near a high. If it goes through that dotted line on the top, I'd be interested in maybe looking at buying some. White Fiber, they are a company that helps put together data centers with high speed, high performance computing components. I've been watching them a little bit. You notice they had a pretty good long wide range bar in week one. Then it came down, undercut their day one low, which 91% of all IPO stocks do. and then it came back pretty quickly. And it's been pretty volatile. I don't have a position, but I'm watching it. And I don't like the really long range bars. Like it hit almost 40 and then went down to like 26 in 2 weeks. But if it can settle down and form some sort of sideways consolidation and burst through the top, I might be interested in that one. And then Figure Tech Solutions. I had to do my homework on this one because I didn't hear about them. The stock popped up as one of the stocks that is a recent IPO that's doing well. They do home equity loans, but they're not a bank. And they do it using some collateral and other things, like they can use digital assets. And I don't really understand much about what they do, but they look like they're growing quickly, and they're financing people with loans, and they're a non-bank. So it's interesting to me. I want to learn a lot more about them before I consider investing, but it popped up as a good performing IPO. And then StubHub. I've been talking about 2 years. I've been coming on your shows and talking about the ones to look for are Klarna and StubHub. Well, StubHub finally came out, and I think I mentioned before, I'm not a big fan of StubHub because I don't like their high fees on tickets. But notice how they came out and they reached a high above 27, 28 and dropped all the way down to like $16 a share. And there's a lot of IPOs that do this, and now it's trying to go sideways. I'd be interested to see if it can go sideways and have a good long due diligence period and then grow earnings before I would ever consider buying them. But like many IPOs, they had a lot of hype. When they finally come out after a long delay, they get punished. And we can talk about maybe a future one that might do a similar thing.
What is your number one rule?
My number one rule is don't buy in day one. And here, look at Klarna. There's another one that we've talked about for a long time. And look at that big, long, wide-ranging bar on day one. It got somewhere between 55 and 60. And then next thing you know, it's trading down, under $40 a share. We always measure from the day one close because people like me and you, we can't get we can't get shares offered the night before they actually hit the street. And you're down 18% from the day one close on Klarna. Bullish received a lot of hype from the price the night before to when it opened up on the street. It was up over 100%. But if you bought on day one near the close, you're down 26%. And
let's stop. Let's stop at this one for a second.
Yeah,
because you made me look so good on this one. You did. A buddy of mine got some shares, and he sent me look at it. I'm like, what? Crypto, institutional, stable coin? I'm like, oh, I'm like, what's it priced at? And he said like 35, 37. I said, there's no way that it's going to open there. I said, you have to sell. I said, you have to sell on day one. And I told him I told him to scale up at like 90, 100, 110, 120. He doesn't, he doesn't trade. I think he was like an airplane on a phone or something, but he watched the open. And then after it came back down under 100, he hit the sell button at 90, like 90, 50. That's the good news. The bad news is that about a week and a half later or 2 weeks later, his wife looked at her email and she got some stock too that he never got out of.
He didn't know about.
That he didn't know about. But I've been trying to I don't know. I mean, I've been trying to pick a bottom in here for him because I'm not sure when the due diligence, when he can rebuy. I mean, chart's not looking too good here. Are we forming support here under 57? What's your take on bullish?
Well, here's what I would do. When stocks do this pattern that you see there, I would wait for an earnings call or two and see how they treat the stock. That due diligence phase typically lasts 6 to 9 months. And when they perform in terms of sales and growth in earnings, the way that Wall Street expected, they start pushing the stock back up. So you can wait, be patient, keep watching it go sideways. And after an earnings report or two, when it finally starts to go up and it gets above that dotted line, that's where I'd be tempted. Okay,
let's move on to StubHub.
Okay, I talked about that once already. So let's move on to Gemini.
Okay, Gemini.
That one also had a lot of hype. I believe they provide infrastructure for digital assets and cryptocurrency and things like that, that was looking like really high because Bitcoin and others were at all-time highs maybe when that stock became public. And look what's happened. If you bought anywhere on day one, you're down. Even if you bought near the close, you're down 42%. Once again, don't buy on day one. The proof is in the charts.
All right, let's keep going here. What do we have to look forward to in 2000? Well, there's only 2 months left here. 2025, 2026. I'll tell you, if I was doing an IPO and this, I'd be getting that out there. I'd be doing the dog and pony show. I'd be saying, "Hey, get me out there." What do we have to look forward to?
I'm still looking forward to SpaceX and Starlink. I think those are going to be some very popular and powerful stocks. Again, I wouldn't buy day one, but I'd be watching them closely to see some sort of consolidation. Discord, I don't know if they're ever going to come out. They've been talking for years. And then the one that now that they finally reorganize and they can become a profit bearing company is ChatGPT. But I think they might end up being a little bit more like StubHub or something. I read they're looking at not going public until 2027. And when you wait that long in the private equity markets lately, it turns out that all the bloom and that you've been normally get in the past is priced in before it goes on the street. Yeah. I think I saw they're looking at a valuation of most recently was it 500 billion or 600 billion. This might be the first $1 trillion valuation at an IPO if they wait 2 years. But unlike when Microsoft and Apple went public, and they grew by thousands of percent, how can you grow from let's say almost $1 trillion valuation when you come public to then you can't grow 1,000%? I mean, it's just not going to happen, right? So I
think I'm with you, Eric, on this. Like right now, everybody is still talking about ChatGPT. I mean, like, why not IPO when everybody's talking about it? The buzz is so big. I mean, this is like, you wait 2 years, we'll be talking about something else. It's going to be AI is going to go exponential. Like you're going to have so many different things to see. I mean, ChatGPT was kind of the first thing that got us all talking about AI.
Exactly.
Like it was there, but that's what got everybody talking about it. It's like, look at this, what this thing can do. I mean, I'm with you, man. I'm like, strike while the iron's hot. Don't wait for it to cool down. I would get it out there.
Yeah. And if they can raise capital, maybe that's what they need to get even bigger. I don't know about you guys. I use, AI for certain things. I use it for helping me program TradeStation for trading and things like that. And it's good in certain things. But it's not, AI is not very good yet. If you've tried it, you know what I'm talking about.
Makes a lot of mistakes.
It makes a lot of mistakes. And I always say it's like a 17 or 18-year-old. You ask a question. They never want to admit they're wrong, and they never want to not answer.
That's kind of right.
Couple more things before we let you go, Eric. Just the characteristics of companies like Google and Facebook, like when they IPO'd as far as revenue, and then Lyft prior to the record holder. Just talk about the divergence and where these companies stand with as far as making money or losing money.
Well, let's go back to Google. Remember, they were criticized because they did a different process for IPOing than a lot of companies at the time. But they came out and they were hit a little bit in the short term, and then they went up. They went public when they still were at the stage where they still had a lot of revenue growth and sales growth coming up. And I've noticed that the more recent IPOs, they come public when they're already, what do they call them, unicorns? They're already billion-dollar valuations in the private equity market. And they don't have the explosive growth available because they've already grown a lot. Some of their biggest growth years happened before they were public. And it's affecting how much these stocks go up in the long term. And so when you talk about you talked about, I think you mentioned Lyft. Lyft was a company, they were after Uber, and I believe they got a big valuation boost while they were still private. And when it finally went public, it was a nothing. In fact, they dropped and they stayed low for a long time. So I think there's a little bit of a bias against companies that wait too long. I'm with Dennis. I think ChatGPT should have struck when the iron was hot, when the growth is still ahead of them, and that would allow people to come along on the ride. Look at Lyft there. it's never. I mean, to me, that if it would show up on our book, it would be a disappointment. It's never gone above the day one high. It's still in a due diligence phase. It's bouncing along the bottom. That's a stock that's not even my radar. I don't even watch it.
Yeah. Eric, one more question for you, and it's a big one maybe. Do you do SPAC research too? Like, do you look at the SPACs? Because obviously you focus very much on the IPOs, but we know a lot of companies, not so much as of late, but a few years ago were really going public as of SPACs. There's still a few of them out there. Do you do SPAC research?
I did. After 2021 with the big numbers, I did a research project with a summer intern, and she was a Northwestern student and happened to be my niece, and she did great research. And what we found was that if you treat SPACs at the day they announce a deal, similar to the day of the stock goes public, you can use the same formulas, the same behavior. But if you look at they come out all around at $10 a share, right? And it doesn't mean anything. It just bounces around, does nothing. But the day they announce the deal, treat that as the IPO day, and then you can use
sell
the
on that
same
day
rules.
they announce the deal.
Yep, and or wait. Again, don't buy that day if you don't have any, and then you wait for it to form some sort of due diligence phase or some sort of pattern. There's been very few SPACs that have made it and done well. I think DraftKings was one of them.
DraftKings was good.
But I forget there's only a couple more. But my research showed on SPACs, the vast majority underperformed IPOs. They were in general, they were awful investments for people if they bought them.
Overall, in all the years you've been doing this, like, what's been your favorite one and what's been your least favorite?
In terms of IPOs?
Yeah. From a personal standpoint, you don't have to talk about how much you made or how much you lost, but just like one that you did well on, you held on to, and then another one where you just took a bunch of stabs at and ended up with blood on your hands.
The most recent one is Palantir. For some reason, I was watching that early, got in early, and held on for a long time. And I'm watching the earnings tonight. But Palantir is probably one of my most favorite over time. And then there was one that it seemed like I kept getting, I kept going in and getting my hand burnt and going back and losing money on it. Maybe it was Upstart. They, for whatever reason, I call it upset because I did so terrible at it. But yeah. And the most surprising thing over all the years is that when we first started doing our research, myself and Eve Bobach and Kathy Donnelly and Kurt Dale, we thought the way to go was you look for a stock that's going to be like Google. Like that was the best IPO, we thought, and we're going to find a lot like Google. The most surprising thing was we found very few like Google. Google was the exception, not the rule.
Awesome.
Eric Krull, he's the author of the Lifecycle Trades, joining us here just about we're going to have to sneak you on before the end of the year, Eric. Really appreciate your input, and make sure you guys pick up that book.
All right. Thank you very much, guys. Good to see you again.
Awesome stuff. I mean, I love, hearing that too, because I've been doing some SPAC trading, obviously, over in the STN room there. And it's good to know, like you said, sell on that day one. And, we had CEPT, which was obviously announced. And, we did some selling on that one off the rumor mostly, but then the pop on the actual announcement as well. So it's good to know. It's good to know that you can approach it kind of the same way. So I love Eric because he does so much great research. So I really respect his research.
Want to give a little word from our sponsor here. Hive Digital Technology is a global leader in green powered data centers for Bitcoin mining, high performance computing, and AI, operating nearly half a gigawatt of renewable energy. Hive is on track to capture 3% of the world's Bitcoin production by the end of 2025. I think it was probably like a month and a half ago now that they said they were at around 2%. So still, got some growth to do here for Hive. There's a QR code in the bottom right corner of your screen right now. You can scan that, or there's a link in the description of this YouTube video. You can learn more at either place about Hive. Thanks again to our wonderful sponsor, Hive Digital Technologies.
And thanks to Frank Holmes. Crypto, take 1 minute, talk crypto here before we go into the IREN deal, because Bitcoin not having a great morning here. Again, Joel, the crypto is trading down here. One concern that I've been talking about this entire rally here and we've been talking about it, is Bitcoin continues to lag. So we have the Qs breaking out, making new highs. We know Magnificent 7 was helping that for a while, obviously until Facebook imploded there. But I mean, really, when you look at Ethereum, you can look at the ETHE, been underperforming, been going down for the last 2 months. But Bitcoin, IBIT, or if you want to look at Bitcoin itself, it's just been a slow, steady leak here. So it's hard to like get like and say, you know, yeah, all-time highs, everything's going great. It's not going that great in crypto right now. So something has cooled off. Like crypto has been trading with the NASDAQ for a very long time. Qs go up, Bitcoin goes up, everybody lives happily ever after. It's not been the case. Crypto's been a little bit underperforming here lately. Thoughts on Bitcoin, technically speaking?
I mean, every time it like has these sell-offs and stuff, and then I say, "Yeah, boy, this is in trouble." Then it rallies like $3,000, $4,000, $6,000, you know, on you know, and then it gets back up. I would say let's just throw the blinkers off here and say, go back to our technicals and say, "Wow, this is trading $6,000 below its 50-day moving average, right?" And it has its little spurts. But the last few times, the last 3, 4, 5 times that this has popped to its 50-day, it's been sold, and it's been sold hard. Also, it's made
overhead supply.
Yeah. After this dip here, how much of a lower high did you make? And I know I did this before, and I know I got absolutely smoked on it because it had a pop. But you had about a $20,000 sell-off here. If you're going to sell off $20,000 from 117, that's going to take you to 97,000. So based on all things considered here on the technicals, this has it, you know, I would step, if I wanted to be a buyer in this, maybe wait for, because I think what's going to happen, if and when it ever cracks 100, people are going to be like, that's bad. If it goes back into 5 digits.
I kind of almost feel like it wants to do it. Like it wants to do it. It wants to crack 100, shake out everyone, get down like 97, 96, and then do the whole Gil Morales undercut and rally trick. Maybe that's what it wants to do. Maybe it wants to get under 100, shake everybody out.
There's the 200.
Not far from the 200 either. Momentum is completely gone from this now, and it's like, you know, it's starting to turn the other way. So crypto is not like the NASDAQ right now. That's interesting. So that's you know, we always talk about looking for, you know, caution signals. That's one red flag. One red flag, something the bears can chew on, is crypto has been underperforming for a while here now. IREN.
I can't believe we just get into this now.
We get these deals. Microsoft saving another stock here this morning. Not saving it, but igniting another stock here this morning. Right up to new all-time highs. At least it hit this morning before it's peeled back a little bit here. We got a deal. Microsoft, much like the NBIS a few weeks ago.
Reading from the press release here, IREN will provide Microsoft with access to NVIDIA GB300 GPUs over a 5-year term with a total contract value of about $97 billion, including a 20% prepayment. IREN has also entered into a deal with Dell Technologies to purchase the graphics processing units and ancillary equipment for about $5.8 billion. So if you're wondering why Dell seemed to be responding to this IREN Microsoft thing today, it's because there's also a Dell component in here.
Right, Dell having a great day too. Long-term portfolio doing okay today here. Wow, big move for IREN, Joel. This is very similar to NBIS. Obviously, it was a Microsoft deal that ignited NBIS back in September. We bought that. We bought that stock. I'm long. It's still NBIS. We were trading it, and then I sold, and then I bought it again here at $100 when it recently dipped.
Oh, that's
or 102.
Nice.
It's holding up really well. It's been really good. I mean, it's like I've said this, and I gave this analysis on, like, it puts it on the map. When you get a big contract from a big gun like that, it gives you a little bit of fundamental support, because you can look at this company IREN and say, hey, you know, here's a company that had 700 million or something in sales last year. You know, so, or this year projected 700, 800 million. Now you got $9.7 billion contract. It is over 5 years. So
Sure.
You're talking like $2 billion a year, approximately, correct? If we're just doing the math.
Yeah.
So, I mean, that's like tripling the revenue, or at least doubling it. So that's huge. That's like real fundamental, real revenue here all of a sudden and real contracts. So, I mean, it's very similar to NBIS, in my opinion.
Just one little disclaimer here. In the press release, IREN says the company expects to fund the CapEx associated with the contract through a combination of existing cash, customer prepayments, operating cash flows, and additional financing initiatives. So there's my little low-key disclaimer on this IREN deal. Company announcing additional financing initiatives. Just a heads up.
So, in other words, Brent is looking for an offering.
You said it, not I.
Okay, that's a good point there too. So remember that. Brentster, nice research there. We appreciate it.
Gotcha,
So that can happen. Sometimes you see these big pops.
We're
stocks, like,
popping.
well,
What's
we're not
going
gonna do that
on?
right
What
now.
I missed?
Joel.
What's going on? What's going on? We just exploded higher.
Back
Something
over
happened.
6,900. We are looking for news
9
here.
o'clock news. Got to be something. Somebody announced something at 9 o'clock.
Someone said something positive somewhere. Doesn't that? What? Look. Go to Truth. Go to Truth Social. What's on Truth? Nothing on Truth.
Something happened. I agree.
All right, we'll dig. We'll give you guys that information here in the STN room. I just want to say a special guest is joining us tomorrow. We haven't had Cameron Dawson.
It's Amazon.
What?
Amazon Inc.'s $38 billion deal with OpenAI to supply NVIDIA chips. Okay, so the headline's weird. Amazon Inc.'s $38 billion deal with OpenAI to supply NVIDIA chips.
Okay, so why
am I reading that wrong? Because Amazon doesn't own NVIDIA chips. So they ink a $38 billion deal with OpenAI, but then the to supply NVIDIA chips is confusing me.
Well,
that's all I have. It's Bloomberg reporting. Bloomberg is reporting this. That's what I got. So Amazon ripping higher here. Wow, big move.
All right,
Amazon. Hey, Amazon.
Yay, Amazon. Another one of the largest stocks in your portfolio, right?
AMD and Amazon are two of the biggest. Yes.
All right.
I like the A's. I don't know why. I like the A's.
Cameron Dawson tomorrow, Chief Investment Officer, New Edge Wealth, folks. Thanks for joining us on Pre-Market Prep.